In a significant move that could reshape the landscape of cryptocurrency regulation, Japan's financial services agency FSA is reportedly poised to classify cryptocurrencies as financial products under the Financial Instruments and Exchange Act. This transition could introduce insider trading rules to the crypto market, placing it under the same scrutiny as traditional financial assets. The Nikkei reported this development on March 30, 2025, indicating that the FSA aims to submit a bill for legislative amendment to Japan's parliament as early as next year. This anticipated shift comes amidst a global re-evaluation of how digital assets are regulated. The FSA has been engaging in closed-door study sessions with experts to explore potential changes to the existing legal framework, reflecting a broader trend among international regulatory bodies to tighten their grip on cryptocurrency governance. In the United States, for instance, the Commodity Futures Trading Commission (CFTC) announced that digital asset derivatives will now be treated similarly to other financial products. Concurrently, the Federal Deposit Insurance Corporation (FDIC) released new guidelines enabling financial institutions to engage in crypto activities without prior approval, contingent upon effective risk management practices. With today's action, the FDIC is turning the page on the flawed approach of the past 3 years, stated FDIC Acting Chairman Travis Hill, highlighting the agency's commitment to creating a safer environment for banks operating within the cryptocurrency sphere. This sentiment was echoed by the Office of the Comptroller of the Currency (OCC), which clarified banking permissions for national banks regarding cryptocurrency activities, emphasizing the necessity for robust risk management controls. As Japan moves forward with its regulatory adjustments, the implications for the cryptocurrency market could be profound. The introduction of insider trading laws could enhance market integrity and consumer confidence, particularly in a sector often criticized for its volatility and lack of transparency. However, this regulatory tightening raises concerns about potential stifling of innovation within the crypto space, as companies could face increased compliance costs and operational challenges. The backdrop of these developments includes rising tensions in global trade, particularly as the U.S. prepares to impose new tariffs on imported goods, which could impact investor sentiment across various markets, including cryptocurrencies. The looming tariffs set to be announced by President Donald Trump on April 2 have already triggered fears of a trade war, cooling risk appetite and contributing to a decline in both Bitcoin and stock prices. Bitcoin has seen a notable fall of 18% in recent weeks, with analysts suggesting that tariffs could further complicate the economic landscape for digital assets. Despite these uncertainties, large Bitcoin holders, referred to as whales, have continued to accumulate Bitcoin, indicating a sustained institutional interest in the asset. While the short-term outlook remains murky with potential tariff escalations looming, long-term price predictions for Bitcoin remain optimistic, with some analysts projecting values could soar to between $160,000 and $180,000 by late 2025. As the regulatory environment evolves and geopolitical tensions continue to influence market dynamics, the cryptocurrency sector stands at a crossroads. Japan's potential regulatory changes represent a critical juncture that could either bolster the legitimacy of digital assets or challenge their growth. Moving forward, stakeholders will be closely monitoring how these developments unfold and their implications for the future of cryptocurrencies globally. In a turbulent week for cryptocurrency markets, Bitcoin's price has experienced significant fluctuations, triggered by the dual pressures of inflationary fears and new tariff threats from former President Donald Trump. After a brief surge towards $90,000, Bitcoin has retreated to approximately $80,000, raising concerns among investors about the cryptocurrency's stability. This downward trend comes amidst speculation of an impending price boom fueled by recent statements from the Federal Reserve suggesting a potential shift toward monetary easing. Arthur Hayes, a notable figure in the cryptocurrency trading community and co-founder of BitMEX, has been vocal about the implications of Federal Reserve Chair Jerome Powell's recent comments. During a podcast appearance, Hayes articulated that the Fed's tone has shifted, indicating a possible return to quantitative easing, a monetary policy aimed at stimulating the economy by increasing the money supply. There was a seminal change in Powell's tone at the last Fed board meeting, Hayes noted, hinting that the Fed might soon adopt more accommodative policies despite grappling with a staggering $36 trillion national debt. The backdrop to this volatility includes Trump's recent tariff announcements, which are set to affect imports from Canada, Mexico, and China starting April 2. Trump's insistence on aggressive tariff strategies has created a ripple effect across various markets, including cryptocurrencies and stocks. Massachusetts Senator Elizabeth Warren has even warned that nobody is safe, alluding to the precarious position of Federal Reserve officials under Trump's administration who could face dismissal if their policies do not align with the former president's agenda. Despite these pressures, some analysts maintain an optimistic outlook for Bitcoin. Marcus Thielen, the founder of 10x Research, believes that a combination of Trump's recent flexibility regarding tariffs and a dovish stance from the Fed could pave the way for Bitcoin's recovery. Thielen's analysis suggests that Bitcoin is in the process of forming a market bottom, potentially setting the stage for a rebound toward the $90,000 level. The broader implications of these developments are significant, especially as Bitcoin continues to gain traction as a corporate treasury asset. Elliot Chun of Architect Partners predicts that by 2030 a quarter of S&P 500 companies could hold Bitcoin on their balance sheets as part of their long-term asset strategy. This trend is already apparent, with companies like MicroStrategy and GameStop embracing Bitcoin as a hedge against inflation and market volatility. As the cryptocurrency landscape evolves, it remains to be seen how these internal and external pressures will influence Bitcoin's trajectory. The convergence of Federal Reserve policy, geopolitical tensions, and institutional adoption sets the stage for a dynamic April in the crypto markets. Investors and analysts alike are keenly watching these developments, as the potential for Bitcoin's resurgence hinges on the interplay between monetary policy and market sentiment. As we move into the new month, the coming weeks will be critical in determining whether Bitcoin can reclaim its recent highs or if it will face further challenges in a volatile economic landscape. The cryptocurrency market is currently navigating a turbulent landscape, with recent developments casting uncertainty over its future trajectory. Among the tokens affected is the official Trump coin, which has seen significant fluctuations in value, prompting speculation about its potential to reach new highs by 2025. Following a recent low of $9.90 earlier on March 30, the Trump coin has rebounded slightly to around $10.26, sparking discussions among analysts and investors about whether this is an opportune moment to buy. Despite a modest increase of approximately 1.2% on the day, the Trump token has faced a challenging week, experiencing a decline of 10% and a staggering 22% drop over the past month. These figures illustrate a period of consolidation following a prior surge, leading to debates within the crypto community about whether the recent dip signifies a market bottom or if additional declines are on the horizon. Notably, the broader cryptocurrency market remains bearish, with Bitcoin trading around $83,000 in market volume, decreasing by nearly 30%. The Fear and Greed Index has also shifted toward extreme fear, currently sitting at 24. Looking ahead, many experts anticipate a potential resurgence in the cryptocurrency market in April, coinciding with the onset of altcoin season. This shift could present a significant opportunity for Trump and similar meme tokens to recover and potentially thrive. Predictions for Trump's price vary widely, with CoinCodex projecting an average of $133 by 2025 and a peak of $233 in February, while ICOBench suggests it could reach $100 within the next year if its current momentum continues. Conversely, Binance maintains a more cautious outlook, forecasting only a 5% increase to about $10.30 in the near term. The speculative nature of these predictions underscores the inherent volatility of cryptocurrency investments, where factors such as market conditions, investor sentiment, and regulatory developments can dramatically shift outcomes. One potential catalyst for a bullish trend is Trump's anticipated association with political events, particularly a meeting planned between former President Donald Trump and El Salvador's leader in April. Given El Salvador's pro-crypto stance, This meeting could inject positive sentiment into the market and bolster Trump's growth. Meanwhile, the cryptocurrency ecosystem is also witnessing the emergence of new contenders. Mind of Pepe Mind, a meme coin that combines AI technology with cryptocurrency, is gaining attention for its innovative approach and potential for strong growth in 2025. Currently in pre-sale, Mind has already raised $7.7 million and is positioned to capitalize on the meme coin trend, offering unique functionalities that enhance trading strategies for its holders. As these dynamics unfold, the cryptocurrency market remains susceptible to external pressures, particularly from geopolitical developments and economic policies. For instance, recent tariff threats from the Trump administration are heightening fears of a trade war, which could further impact investor risk appetite and consequently the performance of digital assets like Bitcoin and Trump coin. Analysts have observed that Bitcoin has already fallen significantly in response to these tariff concerns, with prices dropping toward $80,000 after a brief surge to nearly $90,000. Despite the current volatility, some analysts remain optimistic about the long-term outlook for Bitcoin and the cryptocurrency market as a whole. Predictions for late 2025 suggest that Bitcoin could soar to between $160,000 and $180,000, bolstered by institutional demand and potential easing of monetary policies by the Federal Reserve. As the situation continues to evolve, investors and enthusiasts alike will be closely monitoring both the performance of Trump coin and the wider cryptocurrency market, with the hope that upcoming political events and market trends will provide clarity and direction. The question remains, will Trump coin reach $200 by 2025, or will it be overshadowed by the myriad challenges facing the crypto landscape? Only time will tell as April approaches, potentially bringing with it a wave of new developments and opportunities. In the ever-evolving world of cryptocurrency, March 30, 2025, has been a day marked by significant developments that could shape the near future of this dynamic sector. As industry stakeholders grapple with regulatory clarity, viral moments involving key figures, and market fluctuations, the landscape remains as unpredictable as ever. A spotlight on U.S. cryptocurrency regulations reveals that experts are urging lawmakers to prioritize clarity around stablecoins and banking relationships before delving into tax reform. Muttan Erder, the general counsel for the decentralized blockchain network Orbs, emphasized that tax isn't necessarily the priority for upgrading U.S. crypto regulation. He advocates for a tailored regulatory approach that addresses securities laws and banking obstacles, suggesting that such measures may yield greater benefits for the industry than immediate tax considerations. Erder believes that the current administration is more supportive of cryptocurrency than previous ones, citing President Trump's recent executive order aimed at establishing a national Bitcoin reserve from seized criminal assets. However, he cautions that meaningful legislative change will ultimately require congressional action, a challenging prospect given the complexities of U.S. politics. In a lighter vein, a video featuring Ethereum co-founder Vitalik Buterin has captured the attention of the crypto community. In the clip, Buterin is seen kneeling before a robot and playfully mimicking a meow sound, prompting speculation about its implications for Ethereum's future. Crypto influencer Wendy O remarked, "The future of Ethereum is in this man's hands." Meow reflecting the community's blend of humor and hope surrounding Buterin's influence. Phil Fogel, co-founder of Cork Protocol, echoed similar sentiments, expressing that the entertaining moment only makes him more optimistic about the cryptocurrency's trajectory. Meanwhile, the prediction market platform Kalshare has taken legal action against gaming regulators in Nevada and New Jersey. The lawsuits come in response to cease and desist orders aimed at halting Kalshare's sports event contracts. According to Kalshare, their event contracts, which utilize a two-sided market model, are fundamentally different from traditional sports betting, a point they intend to argue in court. This legal battle underscores the ongoing tensions between innovative financial platforms and existing regulatory frameworks. Market-wise, Bitcoin has been fluctuating within the $82,000 to $85,000 range, recently testing support at $82,000 before bouncing back slightly. It is currently trading at approximately $83,008, reflecting a modest gain of 1.15%, albeit with a concerning 45% drop in trading volume. This decline indicates that bullish sentiment may not be fully established, suggesting a potential for further downward movement. Ethereum similarly tested its support level at $1,800 with trading volume down by 25%, raising concerns about the strength of its recovery. XRP, however, has shown resilience, gaining 4.67% and trading at $2.16, which has garnered positive attention amid the otherwise cautious market environment. As the crypto market approaches the end of the first quarter, the global market cap sits at a staggering $2.96 trillion with trading volumes around $53.47 billion. Analysts and investors alike continue to speculate on upcoming trends, with many keeping a close eye on regulatory developments and market responses to them. The landscape of cryptocurrency is rife with potential and pitfalls, and as we move further into 2025, the interplay between regulation, innovation, and market dynamics will undoubtedly shape the direction of this burgeoning industry. The coming weeks are likely to reveal whether current trends will solidify into a new phase of growth or if unexpected challenges will arise, keeping stakeholders on their toes. As the cryptocurrency market braces for yet another week of volatility, investors are keenly eyeing key players that could shape the landscape in the coming days. With the implementation of President Donald Trump's reciprocal tariffs and the impending release of critical non-farm payroll data from the U.S., market dynamics are set to shift dramatically. Currently, major cryptocurrencies are in a bearish phase, with Bitcoin recently trading at approximately $82,432, reflecting a market sentiment that leans heavily toward caution, as evidenced by a fear index rating of just 25. Among the cryptocurrencies to watch this week are Solana, Polkadot, and Cronos, each offering distinct narratives that could influence investor behavior. Solana, a leading Layer 1 blockchain, is experiencing critical price action as it hovers just above a significant support level at $119.50. Analysts note that this level has historically proven resilient since April of last year, suggesting that a drop below could trigger further declines, potentially landing the price at $100. The formation of a death cross pattern in early March, where the 50-day moving average crossed below the 200-day average, adds to the bearish outlook for Solana. A breach of $119.50 will confirm a bearish breakdown, stated an analyst, highlighting the importance of this support level. On the other hand, Cronos, formerly known as Crypto.com, has shown remarkable resilience, surging 30% in the past week and 54% from its low point this year. This uptick is attributed to a strategic partnership with Trump Media to launch exchange-traded funds ETFs, alongside a community-driven decision to expand the token supply and initiate a token burn. The price has rebounded after testing a crucial support level at $0.0715, and should it break above its monthly high of $0.1197, further gains could be on the horizon. Polkadot, another significant player, is currently trading at $4.08, just above its critical support at $3.60, a level it has struggled to break below since 2022. The cryptocurrency has formed a falling wedge pattern, typically a bullish signal in technical analysis. A breakout from this pattern could see Polkadot's price soar towards $12, marking a significant turnaround amidst a generally bearish market sentiment. Adding to the mix, a new contender in the crypto space, Solaxi, is gaining traction as a promising Layer 2 solution built on Solana's network. The pre-sale for Solaxi has attracted significant interest, raising over $28 million as it aims to enhance transaction speed and reduce congestion on the Solana network. Analysts are drawing parallels between Solaxi and Ethereum, suggesting that it could outperform established players once it launches on exchanges. With features like multi-chain support and customizable infrastructure for developers, Solaxi presents a compelling case for investors looking to diversify their portfolios in a challenging market. In the broader context, market participants are also wary of potential capitulation events, particularly for Bitcoin and Solana. A trader known as Capo, who accurately predicted the 2022 downturn, warns that both cryptocurrencies may see further declines after brief bullish movements. A strong reclaim of $84,000 for Bitcoin is necessary to confirm strength, he stated, while also suggesting that Solana may rally to $180 to $200 before experiencing a significant pullback. As investors navigate these uncertain waters, the week ahead promises to be pivotal for these cryptocurrencies. With macroeconomic factors at play and the ever-evolving landscape of digital assets, it remains to be seen how these developments will unfold and what opportunities may arise for both seasoned and new investors alike.